Let's go to Faye now. Faye, what do you have for us? The NFO season is heating up.
It is more US funds, Nikunj. In fact, adding one more to the packet already. So let's find out if this new US fund has anything to offer that's not already available. Let me bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, we have another US fund on the block. Now, the underlying fund already has a strong track record overseas. But for investors looking to invest in the global market, do you find the Pinebridge India US Equity Opportunities Fund interesting at all?
Yes, I find, funds from US, the funds, which will be investing in US market, I find them interesting for primarily two reasons. One is that, the long-term outlook on the currency is something where, because of the interest rate differential, the rupee will keep depreciating. Notwithstanding the short run, 3 months, 6 months, there could be a different experience. But when I'm looking at, 5-year, 10-year period, because of the rate differential in the two economies, because of the inflation dynamics in the two economies, our currency will depreciate. So that is one which I like, and that is going, the status of the US dollar as a currency, as a reserve currency for many countries, I don't think that is getting diminished. So that is one. That apart, the underlying companies in the US, they are globally competitive businesses. When we are talking of funds, I think it's a very well diversified. I would say that normally my opinion about global investing is that one should be investing in a fund which invests all over the world. Because diversification is one thing which is in an investor's control, and that should be endeavor. That should be the aspiration. That is all that we can do. And from that point of view, even though it looked like a US fund, it's a fairly well diversified, because the underlying companies of these funds, they have the whole world as their market. So in that sense, it is a very well diversified fund.
But the Indian investors might not be very familiar with the Pinebridge AMC. It only has 7 funds in its basket right now. How would you rate this asset management company? How does it stack up in your view in comparison to names we're more familiar with?
There is a regulatory structure which governs all mutual funds, and that applies to Pinebridge as well. Yes, Pinebridge has a very unusual history. It got started and faced with the 2008 crisis. It got started as AIG, and AIG, was in the middle of the global financial crisis, and that is why the investment management business world over was sold off to an entity, and that has been styled as Pinebridge. But I would say that the global investment management business, the way it has been configured right now, the continuity remains. Yes, it is not a very well-known name. It's a relatively new name, so to say, but it is an old company which had to face this. So I would say that Pinebridge has been. I look at Pinebridge as a startup, but it is a startup with a foreign parentage. And this particular fund, I would look at it that here is a fund with a credible history. It is worth a look, but investors don't have dearth of choice. You have, wide variety to choose from. If you, look at 3-4 varied things to choose from, I think, Franklin Templeton is a similar thing. Franklin Templeton US Opportunity. Likewise, if you look at Motilal Oswal Nasdaq 100, that is another choice. If you are looking at, conservative investment selection in the US market, you have the ICICI Prudential Blue Chip Fund. So you have funds to choose from of all kind, and this is another one.
All right. In fact, Dhirendra, we have a question from one of our viewers. Anurag has written in. He tells us he's been investing 6,000 rupees in 3 ALSS schemes. He also has 5,000 rupees going into a PPF every month since January this year. And he has bought a Mediclaim policy as well. He now wants to know if it makes sense to buy a policy from LIC. He wants your opinion on what his investment plan should be for the long term. What would you recommend he does?
I would say that, you have done a good job to get started now, but I don't know how much time you have on your side. 1 or 2 things which you should be aware of, and 1 or 2 things worth avoiding. One is that avoid the PPF. If you are in an organized sector, and if your provident fund is deducted by your salary, by your employer, you don't need this. It's a fixed income, and it's a large part of your savings. It's 20% of your savings. You don't need the LIC policy for investment purpose. Ignore that. If you have dependents, go for a large term cover. Go for an adequate term cover. Nothing beyond that. Mediclaim is an important thing, and you're done with it. So I would say drop your PPF, go for your term insurance, and depending on your age, depending on the time on your side, put all your investments, put all your long-term investments into our aggressive growth portfolio if you are little venturesome, or consider our growth portfolio if you are little conservative.